Hey, what's up traders? So in the last video, we talked about the DOM, or the depth of market. And I'm sure some of you had questions, like how do we know if contracts are actually traded at those price levels, or just spoofed? Or have you ever asked yourself, I wish I could see inside those candlesticks and know what's really going on? Well, that's where the footprint chart comes in. Today, I'll show you how the footprint chart lets you see what really happened, not just what was displayed on the DOM, why the footprint chart is better than regular candlesticks, the difference between aggressive execution versus passive order removal, and how the DOM and the footprint chart work together to give you a full picture. So if you're serious about improving your trading, smash that like button and let's dive right in. Now, before we get started, this video is for educational purposes only. I am not a financial advisor, and you should definitely trade at your own risk. Alright, so first things first, what is the footprint chart? The footprint chart shows you exactly where trades occurred at each price level, giving you a real-time X-ray of market activity. Unlike the DOM, which only shows resting limit orders, the footprint chart confirms where those orders actually got filled, or if they were just pulled from the order book. It tracks aggressive buyers and sellers, so you can see who's in control at any given moment. It helps you identify trap traders, absorption, and imbalances that aren't visible on a regular candlestick chart. Now let's talk about how footprint charts are a game changer compared to regular candlestick charts. Most traders use regular candlestick charts, but here's the problem. Candlesticks only show you open, high, low, and close. They don't tell you how price moved within that candle. You don't know if price ripped up aggressively or if it just drifted up on weak volume. You can't see if price actually traded at a level or if it just tapped and reversed. But with the footprint chart, you can see where big traders actually executed orders, not just where price moved. Spot real buying versus passive limit orders being pulled, identifying trap traders who are stuck at bad prices, and confirming strong breakouts by checking if buyers are aggressively lifting the ask. For example, imagine price breaks out on the candlestick chart. Looks bullish, right? But when you check the footprint chart, you see no real buyers stepping in, just sellers pulling their orders. That's a fake breakout, and now you know to fade the move. This is why footprint charts give you a massive edge over regular candlestick charts. Now, a lot of traders rely only on the DOM, but here's the problem. On the DOM, orders can be added or removed instantly without a single contract being traded. But on the footprint chart, you see what actually got bought or sold at each price level. Let's break it down. If you see big orders on the DOM, but they disappear without printing on the footprint chart, those were just fake liquidity, aka spoofing. If price moves up, but there are no large buy orders printed on the footprint chart, it means sellers just removed their offers, rather than buyers aggressively lifting the ask. If price moves up and you see large buy orders on the footprint chart, that's real buying aggression. Buyers are in control. Alright, so how do you actually read a footprint chart? Let's break it down. The left side shows aggressive selling, how many contracts hit the bid. The right shows aggressive buying, how many contracts lifted the ask. A high imbalance, big difference between bid and ask trades, signals strong buying or selling pressure. Now, how you read the footprint chart isn't straight across horizontally. It is actually diagonal. So to check for imbalances, we check price diagonally. If a level has high volume but doesn't move, that's a sign of absorption. Big players are absorbing market orders without price moving. Pro tip, if you see stacked aggressive buying but price doesn't go up, that's a sign that sellers are absorbing liquidity and price could reverse. Now here's where things get really powerful. You can combine the DOM and the footprint chart to get a full story of the market. Here's how. Use the DOM for liquidity clues. Look for stacked bids and offers and how they behave. Watch for spoofing, orders that disappear instantly. Use the footprint chart for execution confirmation. Check if price actually trades at those levels, or if orders were just removed. Look for absorption, imbalances, and trap traders. If you see large orders on the DOM, but they vanish and don't print on the footprint chart, that's fake liquidity, spoofing. There's no real interest. But if you see those large orders actually getting hit on the footprint chart, that's real buying or selling pressure. This is how professional traders confirm smart money moves and avoid fake breakouts. Alright, now before we wrap up, here are some practical tips to use the footprint chart effectively. Look for imbalances. If buyers or sellers are dominating one side, expect expect continuation. Check for absorption. If price stalls at a level with high volume, big players are absorbing those orders. Compare the DOM to the footprint chart. If orders disappear from the DOM and don't print on the footprint chart, don't trust the move. And watch for trap traders. If aggressive buyers or sellers get stuck and price reverses, it's a great fade opportunity. Alright traders, so let's do a quick recap. The DOM shows you resting liquidity, but orders can be pulled. The footprint chart shows you actually what was traded, giving you the real story. Use them together to confirm smart money moves and avoid fake outs. If you found this video helpful, smash that like button and subscribe. And drop down in the comments, do you use the footprint chart in your trading? In the next video, I'll show you another powerful tool that can be used alongside with the footprint chart called cumulative volume delta and the different types you can use. So subscribe and I'll see you in the next one.